the stocks, and I thought the Jefferies view of where to invest was very interesting. So they have run 2 or 3 screens or trackers or whatever you call it, right? So the stocks, one of the screens is stock with valuations and growth visibility. So how are they doing this? On valuation, they are taking below 10-year average PE multiple and 14% growth. And the growth visibility, as they said, 14% growth and less than 3% downgrades. Effectively, that's the long and short. Now, within this list, the stocks which fit the bill, Adani Port and SEZ, Crompton, SHFL, Shriram Housing, and Apollo Hospitals. So these are the 4 stocks which fit the valuation and growth visibility screen. They move away from valuation and only focus on predictable growth screens. Then the stocks which fit the bill, M&M, TVS Motors, Indian Hotels, Amber, and housing finance companies. And of course, just purely valuation screeners, not looking at growth at all, Samvardhana, Concor, and V-Guard. So if you are really itching to put in money, if you like the Jefferies way of doing things, then these are some stocks that might fit your bill. So keep an eye out for them. Textile names are the second ones, Alex, on my list. Pearl Global, Welspun Living, Gokaldas Exports, and whatever else. Export of ready-made garments from India in January was the highest in 34 months.
Wow, that's great.
Yeah, that's much needed, right? We've been talking about this. Is there a shift because Bangladesh factories shut down, etc.? India has not been able to make the cut, etc. We've seen this now. January was very good. And coincidentally, we didn't know this, of course, until the weekend. But on Friday, we had Pearl Global. They expressed a lot of optimism around what could happen per se. So that was very interesting.
And we had Welspun earlier in the week as well.
Yeah, in the conclave, right? Yeah. Talking fairly optimistically about what could happen. So watch out for the textile names. Could be an interesting turn there. And while there are a lot of others, there is Healthcare Global, Federal Bank, and we'll talk about all of them. But I wanted to point out the Citi note on Indigo with a reason. The reason is Mahakumbh, I presume, right? So Citi is saying they've hiked the target price for Indigo to 5,200 from 5,100. They are saying they've opened a 90-day positive catalyst watch. Why? They say that they see a pickup in overall air traffic demand amidst Indigo's strong market share, and they expect significant improvement in PLFs in Q4, which is a seasonally weak quarter. And why would that happen? Anybody's guess. Mahakumbh. You could argue there is a Coldplay concert thrown in, etc., etc. But it is the 1 month strong Mahakumbh which will effectively lead to this. And then, just broadly, just before we go to our guests, broadly, Mahakumbh plus a seasonally strong April to June, throw in some bit of IPL-led travel, if not for anybody else, then for the teams.
And benign crude.
And benign crude, reasonably benign. Yeah, relatively benign. 75 is benign, right? Yeah. We've been used to 70, so we feel 75 is not, but otherwise,
yeah, and
from the
75,
heady levels,
thereabouts.
Yeah, it's good, right? So it's interesting what they're saying about Indigo. So,
very strong load factors, 63% market share in domestic, building on global roots. It is looking positive for this company.
And Mahakumbh, I tell you, Mahakumbh is quite something. Even from Ranchi, there are 3 daily flights, direct flights to Prayagraj.
And you might just see a big flurry of activity as we wind down towards the end.
Yeah,
right? 28th, another 8 days.
26th.
Oh no, sorry.
26th,
another 2 days. Another 2 days. Right. Another 2 days.